Who can executives who already know science and biotech turn to when they need to be a better chief executive officer? Well, they turn to today's guests on the Russo Edge Podcast. Welcome to the Russo Edge Podcast. Today is one of those conversations, and we're going to have it with our really good friend, Gaylene Xanthopoulos, CEO and founder of the Leadership Edge. She joins us from La Jolla, California. Gaylene has been counseling life science leaders for more than 35 years. She's mastered the art of guiding executives and board members through high-pressure, fast-moving environments, all the while finding the winning way to communicate with investors. She's passionate about the intersection of science, business, communication, and overall success. For executives looking to strengthen their approach, Gaylene's wisdom is invaluable. Welcome, Gaylene. How you doing today?
I'm doing great, Solomon. Thanks so much for having me.
Well, of course, it's great to have you join us today. We want to talk to you about the Leadership Edge. Let's start there. Tell us what it's all about.
Well, I guess what I'd start with is I really believe I have the best job in the world, and I'm so fortunate. But it also seems like yours is pretty good too, Solomon. I don't know. You better look out.
Well, yeah, we appreciate that. Go ahead. I'm sorry.
But every day I have the opportunity to help life science leaders, whether they're in the boardroom or at the bench. And it's really leaders, managers, and teams to show up every day as their best. And as a result, really increase performance in these organizations so that they're able to accelerate the pace at which we get great solutions to patients. And that's really what we're all about at the end of the day.
Now, what are the common challenges or needs of a first-time CEO, and how must the CEO adapt as the company evolves over time?
It's a great question because it really the needs of a CEO really evolve over time, both in terms of their own experience, but also in terms of the stage of a company's development. So if you think about an early stage or first-time CEO, one of the first things when I'm coaching a CEO is really to talk a little bit about you're not building a lab, you're building a company. And that's a big shift in mindset, especially for a scientific founder. So what that means is they have to start first by really building a foundation for success. And that means establishing their vision, their mission, their values, because this sets the foundation, as I said earlier, for everything that follows. And then beyond that, we go into strategy. And this is another area where I see a lot of first-time CEOs not really valuing strategy. They have a very operational mindset and a short-term mindset. And that's understandable because they're focused on science and just trying to move that science forward and show proof of concept with the science. But they have to really have this longer term strategy. And I think as we talk a little bit more about how financing happens, that's critical to the equation. The next piece, I'm sorry, go ahead, Solomon.
No, go ahead. Go ahead and continue. I'm sorry.
I was going to say, and after that, it's really about messaging. So do they have a story to tell?
Yeah.
And the strategy, the vision, the mission provide that context for the story that they share, whether they're recruiting great talent or they're going out for some investment. So those are some of the things that happen early on, and then it really starts to evolve and change over time.
Now, I know you often talk about and mention how important communication is, internal communication as well as external communication. Why is that?
Well, I think starting with internal communication, if we're not aligned as an organization, it's a mess. And that really starts with the leadership. When you have that great foundation in place of a clear strategy, clear goals, a clear sense of purpose, it really aligns the entire team in the organization. And if we have alignment and clarity, we can be much more efficient. And in an industry where money is extremely tight and difficult to access, especially today, and yet you're burning a tremendous amount of money, it's really critical that we have those efficiencies. We can't have people doing things that kind of aren't on the critical path or aren't taking us where we ultimately need to go. So that internal communication is really key. And if we have that, then it positions us beautifully for external communication. And when we show up to the external world, people sense that strong alignment in the organization, the efficiencies that follow, and really it helps us more clearly articulate that purpose, mission, goals, values, and sell a story that is not only compelling, but also believable. People feel that you can actually execute against the things that you're putting out there to investors and stakeholders.
Well, many of the clients that we work with today are public companies. So what should CEOs be thinking about when communicating with investors, and why is that important?
Well, your investors are critical. Obviously, this is, again, an industry that burns so much money where you're measuring burn rate, not profitability, sometimes for up to 20 years. So there's kind of not another industry quite like this. And when you're going out to the investment community, we're still dealing with people. And at the end of the day, they want to deal with people that, one, they like. So we always talk to CEOs about show up as your authentic self. If you've got a sense of humor, use that. If you can show some vulnerability, that's great. If you can be a really good listener, because bankers, analysts, VCs want to know that they're listened to and they're heard. So it's not only what you say, it's how well you listen is really also very key. And when we're out there as a public company, at the end of the day, they're buying you and your team. And it's not just you, it is you and the entire team. So really showing up in a way that shows that the team is aligned and that you as a leader have empowered other people. You brought in great talent and you're letting them do the job is really, really important. And then, lastly, credibility. You just have to be able to make commitments to investors that you feel confident you can execute against, because if you're credible and you're hitting those milestones, the investors show up for the next round of financing or the next company that you start.
You just advise, look, show up as a team, as an organization. You know it. CEOs, they just have that mindset. They want to get out there. They want to lead. So how do you kind of thread the needle? How do you teach maybe the nuance of being that strong leader, but still working together as a team?
Well, I think part of it is really understanding, I think initially they come out and think, I'm the CEO. I have all the information. I'm the leader. I need to be at the helm, so to speak. And that's true. And so we typically have our CEOs showing up. Let's say it's on a quarterly earnings call. You're going first. You're setting the stage. You're talking top line, and you're also talking strategy. And then you really want to be bringing in your CFO to be talking about finances, not you. You want to bring your CMO to be talking about the clinical development and how you're doing with that. You want to bring in your CSO to talk about your early stage work. And the reason we do that, I think there's a great example. I remember he's a very prominent leader in this industry, and talking to him, he became a VC. And he and his partner had just had a pitch, somebody had come in and pitched for investment. And when they both walked out, they looked at each other and said, no way in heck are we investing. And I asked him, I said, well, why, what led to that outcome? And he said, every time the CEO talked, the entire team looked, or every time we asked a question, the entire team looked to the CEO for the answer.
Wow.
And what we saw was, we're not just betting on the CEO. This is not a team. And that's so critical. And you have to realize too, investors are betting on the team. And I've had a hedge fund hire me before to say, hey, Gaylene, how can you help me evaluate and assess a team without going under NDA? Because a hedge fund wants the freedom to trade, right? They don't want to be under NDA. And so when they're coming in to have, he says, I want to be able to understand if they're any good. Because he says, I can look at the science and understand that. I can read the financials and understand that. But I'm betting on the team, because good science with a great team will succeed. Great science with a mediocre team will fail. And so we've got to always remember, it really is about the team and that consistent messaging that comes from the team.
That's very interesting and great information, because you mentioned helping CEOs as their companies create value. So what does it take to raise capital in today's market? It seems to be getting harder, just like you just gave a great scenario, how people left saying, oh, we're not going to invest. Maybe they didn't see the team that they wanted to be a part of. So how can you make it easier for maybe some of your clients to be able to raise capital in today's market?
Well, I think today, we're coming out of a couple of years out of the pandemic, but
Yeah.
we're seeing this huge shift. And so during the pandemic, when there was a tremendous amount of capital to be deployed, but no place to invest it, people really turned to life sciences and said, wow, this is the place I need to be putting my money in.
Yeah.
And so what we saw was a lot of first-time CEOs becoming public leaders of public companies very quickly. We saw, in our opinion, a lot of companies that weren't ready to be public, either because their CEO was not skilled, their management team wasn't ready, and in many cases, the science wasn't ready.
Mm.
And so you saw tons of money. It was raining money. And a lot of these first-time CEOs also thought, this is how it goes. Have a great idea, people throw money at you. And as a result, we saw a lot of companies fail. We saw some mismanagement of the capital. Investors got hurt. They haven't had a good exit because the markets, after the pandemic, the markets really closed on the life sciences. And so a huge number of publicly traded life science companies today have less than a year's runway, which is really risky, right?
Yeah.
And so investors now, I think your advantage today depends on your therapeutic area. Obviously, if you're a GLP-1 company, 6 months ago, a year ago, people were really excited. That's the Ozempic types of products and things.
Yeah.
And so that's a huge market. So a lot of money went into those companies. You have other hot therapeutic areas as well. But if you're not in one of those spaces that seems to really be attracting some capital, anything with AI associated also is really attracting capital. But if you're not one of those companies, then investors are being very selective about where they're putting their money because they can't afford a loss at this point.
Yeah.
So you really have to have the things I talked about, have to have that really clear purpose, passion, all that. But the strategy has to be clear. Your plan has to be really solid. You have to show that you can deliver on milestones. You've got to be pretty close to data. Either good data has come out or it's in the very near future because they want to reduce the risk. So anything to reduce risk is what investors are interested in. But they will also always bet on a successful track record.
Yeah.
So if you've got leaders who've made them money in the past, they'll typically line up and show up again. So, it really does so often come back to basics and being somebody that you want to bet on and you're willing to take the risk to bet on.
Yeah, they often want a short runway. There's no doubt about it. How can CEOs manage their executive boards better to meet the growing expectations?
Well, I think that boards, number one, make sure you have the right board. We sometimes see that you have the wrong people on the board. You might have a board full of only investors, and that's difficult because there's sort of conflicts at times in terms of
that's right.
what's driving their motivation. But I think that if you have a good board and you have an experienced board and you have one or two independents on your board, that really helps because they're coming to the table with more realistic expectations. They've been around the block a few times. They understand the markets and what's happening. And they're thinking about longer term, bigger picture types of investment and return to shareholders as opposed to an immediate flip or something that can happen very quickly. And I think they just are more practical and realistic about what's expected. The other thing is, I think CEOs need to run close, and it's not about managing your board. It's really about collaborating with your board. They're there as a great resource to you. And sometimes they do need to help you course correct, or they do need to help you accelerate or raise the expectations. And that's appropriate. So running closely with that board, understanding what motivates them, understanding how they take in information. If we're coming in with tons of detail and the board are people who like to think strategically and you haven't given them that strategic context, they're unlikely to move forward and support the ideas that you're putting in front of them. So you just really have to know each individual board member, the roles they play, how they think, how they make decisions, and hopefully you're dealing with an experienced board.
Gaylene, how should a new CEO approach a milestone event like, say, the JPMorgan Conference, which can really serve as a tremendous launch point?
I'd say number one, rest up before you go.
That's right. That's right.
It's definitely a sprint, and wear comfortable
Yeah,
shoes. And
that's
so,
right.
because they're on the run for those few days that they're there. Bottom line is it's a lot about preparation. It's really working with organizations like Russo to make sure you're really clear on your messaging. You've got a good reputation and image. You're able to line up a lot of meetings, because as much as that conference is a conference, it really is a common meeting place.
That's
That's
right.
really what it's become over the years. And so getting those meetings really lined up is important, but also understanding what is my objective for each of those meetings. So being very well prepared, anticipating what the person you're meeting with is going to be looking for so that you're ready and can respond, but also have your 30-second commercial down, right?
Yeah,
So
yeah.
30 seconds or less. So the people you're passing in the hall or the ones you're introduced to, you can put a compelling enough reason out there that they want to schedule a meeting with you after the conference is over. So, being prepped, having your deck, knowing what you're there for, going with a sense of purpose. And then, like I said, resting up. I have clients who are at 3 events at night, moving from one dinner to the next to the next. And, they're very full by the end of the conference, because that's all they've
Yes.
done is eat and move. But preparation's everything for that.
Yeah. Well, you've given us such great information. So I have to ask, any last final words of wisdom for good communication and how important it is for leaders in life science in that particular industry?
I think, be really clear on what you're hoping to accomplish as a company. People get excited about the science, but it's to what end? And so, we're not research scientists anymore. You're working to get a product out there that will enhance patients' lives. And you have to really understand your audience. And so if I'm talking to an investor, they care about my return, right? It's when will I see a return, and how confident am I that you can deliver on that? So being able to have a very clear plan that you really feel confident you can achieve, clear financials so that people can see it, and don't bring in a 200 slide deck. We see that is such a mistake, but really being able to build that story and engage them in that process, so they're like, man, I don't want to miss on this. And remember, investors they're a pack mentality. So if I'm the only one out there getting excited, I start going, what am I missing? So if I can get a good consortium coming together that's excited about what I'm doing, it's important. And then, like I said, internally, it's everything. So be authentic, communicate when there's uncertainty, over communicate, even if we should have an answer in the next couple of months. People want to be brought along. In the absence of information, they'll make up negative information. They'll assume the worst. And so, I've never seen an organization that over communicates.
That's right. That's right. You have to develop your own narrative, and you have to be very good at it. Just continue to bang that drum and be very consistent while doing so. Thank you to all of our guests and our good friend, Gaylene Xanthopoulos, CEO and founder of the Leadership Edge, for joining us on the Russo podcast. Of course, this is Solomon Wilcox. Thank you for joining us, everyone.